Good morning, traders. This is Bayo from London. It's Friday morning. For the rest of the week, the last day of the week, I'm looking to do a quick analysis on the euro dollar on a 2-hour chart. Mine is going to be basically our technical analysis. I'll be using an harmonic pattern called the bearish Gartley pattern. Oh, oops, sorry about that. Literally, the pattern is a 5-point structure. Sorry, X, A, B, C, D. And the idea is this pattern identifies a potential reversal zone for the price. So because this is bearish Gartley pattern, it will be identifying a resistance zone, which is where point D should be located. As you can see here, on this point D here, this resistance zone should basically consist of 3 different Fibonacci levels from the Fibonacci retracement and extension levels from the price leg within the structure. So for example, the upper boundary of this resistance zone is the 127% Fibonacci extension of the BC leg. The lower boundary, which is this one right here, is a 100% extension of the AB leg projected from the C leg, and the last level is literally just 78.6 Fibonacci retracement of the XA leg, which is this. So the idea is to go short once price has finished consolidating and breaks out of this level. Ideally price will break downwards for this to actually be valid. Price should eventually break downwards. So I'm looking for price to break downwards. I mean, basically this resistance zone is either price breaks upward and continue moving, or price breaks downwards. But ideally price should break downwards, because that's my buy. That's what I'm looking for. So what I'll be doing in terms of the entry levels is I'll wait for price to break downward below this resistance zone. So I want a 2-hourly close below the lower boundary of the resistance zone, which is 1.4471. Once price closes below that, I'll go short. I'll place my stop loss above the neckline that is head and shoulder we had in early June. So ideally I'll probably place my stop loss at 14600. So that's entry upon 2-hourly close below the resistance zone. Stop loss at 14600. And in terms of target, I'm literally looking for price to move downward over the long term. But to manage my trade, I'll be using the Fibonacci retracement of point A to point D, which is at the extreme point on the pattern. So once price moves towards the 38.2 retracement of the AD leg, which will be 14358, I want to move my stop to break even. Once price moves further downwards to the 61.8 retracement, which is this one right here, 1.4249, I'll move my stop to point B. Eventually, what I'm looking for is the price to break below the 88.6 Fibonacci retracement. Once price breaks below this level, then I know the reversal is in full swing. Then I want to manage my trade accordingly. However, if price bounces up here or stalls for a while at 88.6 retracement, then I just want to basically take my profit off the table. This is meant to be a medium term trade. It's not meant to be go for that long, because one thing to keep in mind is this is just a resistance zone, and price could just consolidate and keep moving upwards or reverses from this zone. But ideally I'm looking for price to reverse. If price keep moving upward, then I'm not going to be in this trade. So to summarize, I'm looking to go short below this actually close below the 1.44471. Stop loss at 14600. Ultimate target is 1400, and I'll be using the Fibonacci retracement Fibonacci levels of point A to point D to manage my trade and move my stops accordingly. Good luck trading, and thank you very much for listening.